In this video, traders, we're going to look at CFD trading strategies. Stay tuned. Hey guys, a very warm welcome to you. Alright, so you're here because you're interested in trading CFDs and looking for trading strategies. Well, good, you've hit the right place. This is the channel for you. We have got loads of videos where we talk about trading strategies, trading CFDs, some basics, all that to advanced kind of stuff. We upload regularly. You want to be subscribed to the channel, I promise you. But in this video, I want to talk about trading strategies broadly, give you an overview of some of the things, might go into little bits of context about some of the things that I like about these ones. And if you want to find out more, of course, have a look at all the videos we've got, and also let's get going. All right, so one thing you can do, CFD traders, is you can trade using a fundamental approach. Now, I put this first, but in reality, I don't think many CFD traders trade like that. You might use a hybrid approach. You might say, well, listen, I think this company's doing very well. They seem to be very busy, there's lots of earnings, they've got a good product, they've got a good customer base, etc., etc., etc. So you bias yourself along, and then you might pick a technical spot, which we'll look at in a moment, or you might pick some kind of price action to confirm that. I think that's the sweet spot, really, that hybrid approach. But that being said, fundamental analysis is there. That's analyzing the specific company, the pros and cons of the company, and then making a fundamental decision based on the fundamentals. That could be a bearish thesis as well. Don't forget, beauty of CFDs is you can bet on or trade on a downward direction, be bearish, have a short position. So you could think, hey, this company's going to really struggle over the next year. Take your position, put your money where your mouth is, so to speak, and profit from a downfall in the market. So there's that as well. So fundamental analysis. Now, pros and cons of that. Pros are that you could say over time the fundamentals will always kind of work out. You could say over time that, hey, fundamentals, price will move towards fundamentals. That could take longer, which is the con. The con is that, the downside is that fundamentals sometimes have very little bearing on price for a long period of time. Stock can be overvalued for many years before it eventually comes back, or undervalued, etc. So there's a pros and cons with that, but a longer term play, obviously it's very popular with hedge funds and etc., mutual funds and fund managers. Number two, short term or long term. So not really a strategy per se, but you decide how you want to allocate capital. Do you want to be in and out in a day, intraday, day trading as we call it, or do you want to be swing trader? What's your time frame? And that's something you've got to be comfortable with, and something that suits your personality and suits your thesis. Obviously, if you're trading fundamentals, guys, short-term trading is not going to be for you. If you're trading PE ratios and earnings and stuff, then short-term is not the way forward. It's more like technical and price action. But again, that's the beauty of CFDs. Stamp duty to pay, you can play these games. All right, pair trading. Pair trading is one of the more popular ways to trade with bigger funds. Why is that? Because it dampens down volatility, it reduces risk, and it's a little bit of a different approach. So really, pair trade is saying, okay, rather than having a directional play on, say, BP, you're playing the difference between BP and Shell. So you might go long BP, looking for an upward move. You might go short Shell. So you're playing the difference rather than speculating on the direction of the sector or the stock. So the oil sector or the stock, you're saying, okay, well, I'm pretty neutral on the sector, but I'm bearish on one and bullish on the other. I just think that they're out of sync, then they come back into place. So there's plenty of ways you can do that. That's the beauty of CFDs, is because you're trading on margin, and because you've got no stamp duty to pay. If the margin is really the big one, guys, is that you can afford to kind of leverage yourself up and control reasonable amounts of money just by putting up a small deposit. And so pair trading is super popular. And actually on the channel, we've got a couple of videos to talk about pair trading strategies, what kind of stocks you can do. You can also trade, indices if you want to. Let's say you kind of thought the US was outperforming too much against Europe, so you could do a Euro stocks long trade, S&P 500 short trade via an index CFD, and look for that kind of movement back in the middle. But anyway, that's super interesting concept to look at if that's your thing. All right, so number 4, guys, is stock picking. So you can pick a stock you think is going to outperform or underperform. Let's say you're looking at a tech sector, or let's say you're looking at kind of gaming, or looking at a kind of consumer goods or utilities, or whatever sector you choose. And you can pick a stock you think, hey, that's outperforming, I think it's going to continue to outperform, carry on with your long trade, or hey, it's lagging, I think it's going to catch up. You can express the trade as you want. So stock picking is a key one. And also what you can do with this, guys, is obviously because of leverage and margin, you can have a portfolio of trades on. You know, you might only be able to afford to purchase one trade or split up into smaller sizes. Let's say you've got a £50,000 account, you might only use better to buy two £25,000 positions if you were trading via a traditional broker. CFD trading, because you're only putting up a percentage of the margin, that 50,000 you can have 10 positions that are 50,000 each if you've got 10% margin requirement depending on the stock and stuff. So they're very flexible, and of course you can have some long, some short, so you can have almost a neutral portfolio as well, or slightly biased long, or slightly biased short, or maybe short tech, long utilities. So many different options that you can play on, so you can really express what you think about the markets, you think about the future of trends, etc. with CFDs. And number 5, macro analysis. This is like going really over kind of looking at from 36,000 feet and going, okay, which country is going to struggle? This is kind of some of the hedge fund approach. If you read about hedge funds, a lot of them use this kind of global macro view of, okay, well, this country now is in an economic cycle that's kind of going to go down, interest rate cycle is going to start cutting or whatever. I mean, I'm not really a macro guy, but it's something you can look at and say, hey, I identify this country as a country that's now going to go into a recession, for example, and you can have a short position, you know, on their equities, or you can be trading the currency via a CFD, all sorts of ways of doing that. Or you can express something and say, well, actually, I think consumer goods are going to struggle, so I'm going to short the most vulnerable stocks there. You know, you can play this game by identifying from a kind of top-down approach and identifying weak or strong areas, sectors, countries, etc. So that's one way of doing it. So technical analysis, price action, these are kind of, I think, the more popular ones with shorter term traders. Price action is my very favorite. Technical analysis is basically looking at prices and charts and saying, okay, well, I think that's going to go up because I've seen a price pattern that's very similar. When we see this price pattern again, the likelihood is we'll get some continuation to the upside or vice versa. This channel, we've got loads of videos going to technical analysis, so if that sparked your interest, then do check them out and make sure you are subscribed. Price action is a little bit of a hybrid. It's basically saying, how am I viewing price at the moment? What's happening with price? What am I expecting participants to do next, using some charting, so some technical analysis, some shorter term fundamentals as catalysts. So maybe a day when there's been good news, we want to see some price action confirming our technicals and stuff. So it's really thinking about how other participants are playing, a bit of gaming theory, a bit of watching pure things, not getting too overloaded with indicators. It's a more purer way of trading rather than getting bogged down. There's no right or wrong, you know, all these are there, but regardless of that, all these are good. All these work in some form or another. You've got to find the one that's the right time frame for you, the right kind of trading account size. You've got the time you can commit to trading, experience, how long term, short term you want to trade. Make all that, decide on that. Maybe read a few books, read a few articles, watch a few videos, and then kind of all these strategies, there's sub strategies that come out of that. I mean, just for technical analysis alone, there's probably 1,000 strategies. So you pick your kind of overview, your bigger strategy, and you start to nail down and pick out smaller 1 or 2 handfuls of strategies that work for you. All right, guys, that's CFD trading strategy. If you like this kind of stuff, a thumbs up is much appreciated. Thank you for your support. I'll see you next one. Take care. Bye-bye.